All right. Welcome back to another episode of Take Profit Tuesdays with your boy, Levon Stewart, founder, CEO of Vonnie Effects. And as always, as we like to start each and every single video, this is not financial advice. This video contains education and edutainment with a little bit of comedy on the side. If you do want to be involved in financial markets, please go seek your local advisor, your financial advisor, your stockbroker, your brokerage firm. Those are the ones that you're gonna forward your money to. Were regulated by SEC, FIRNA, and it be the ones that you're gonna help you make a decent amount of money with it. Teach you how to do. So now, if you got into those points where we talked about 3 episodes ago, guess what? You're in profit. We literally bought at the very bottom twice. Not too. How the trade account's looking, because as you can see, the first time that we bought came up a little, didn't really do much. Let me highlight it for you guys. So this was the first time, and what I kind of assumed at that time was that there's not a lot of movements gonna happen, and which is okay. Because I did expect it to level out. Because like I said before, prices again. If you're watching these videos, if you're just now joining in, like the video, subscribe, share the video with your friends, family. If you're trying to get, as I was saying before, if you paid attention to my previous videos from weeks in, weeks out, I've talked about how price moves directions, and for it to move directions as it does, you need to understand the movement and how it could go up, down, left, right. Sorry, it only moves 3 ways, so it only moves up, down, or sideways. And the perfect opportunity, really don't want to buy as it's going up, because again, you're buying. Sorry, I'm just pulling up my Robinhood, just trying to see how good we're doing. So let's say for the week. So if you got into when I got in, overall we did 3% profit. For the month, about 4%, and 3 months is kind of sideways. But either way, so full disclosure, we put about 250 total principal in since the inception of these videos. Again, we're trying to grow this no trading account. Again, I don't know when I'm gonna turn into it. It's just kind of thing I'm doing. I'm in control. I put my own money into it, so I could do as I wish. And what we do see is that we're only about $7. We made we made about $10 in profit this month, and only about $7 from that initial purchase from the original principal. So I'm just gonna assume as soon as we hit around this range right here, right there, those last times we bought, we should probably be in break even. And yeah, we got a long way to go. So as you already know, I'm going to keep looking for better opportunities to buy. And again, if I were you, I'll take heed to my advice here and there. Again, this is all brought to you by me. And I do have to say, these 3 points right here where I bought, if you're just not watching this and you're just not seeing what's going on, and let's just say you just threw a little bit of money into this just to play around, just hey, let me support him, let me see what he's really about, let me test his skills, and I've got these 3 points at least. But anyways, like I said, if you're those swing traders, those scalpers, specifically this was your kind of play. It dipped down, came up, it rallied back up these nice 3 days. Now you kind of have to ask yourself, what's going on in the markets? What's making things go back up as they normally would? So then a lot of things is going on, and let's talk about some fundamentals. And let's see. So first and foremost, the Feds are still, increasing the rate hikes. So a lot of things are going on as far as people putting money to their places, and how are what's also very important to understand how the housing market's also affecting this. So shouts to Gabriela Martinez. She titles Housing Home Price Growth Slowed Record Among Amount in August. U.S. home price growth slowed by the largest amount on record in August, decelerating faster than economics expectations and further cementing that the pandemic era buying frenzy is largely over. So, as far as the prices growing, did she just kind of explain how before the reason why price would go up as far as the housing is because everyone's buying, so as demand increases for it, prices go up, and as prices go up, more people are buying, so on and so forth. So a lot of time you kind of want to buy in prior to it going up because you're getting at a relative discount. But obviously, 2020 is hindsight. Anyone who could have not known the pandemic was happening, and you get a large sum of money, during the pandemic, and you bought property, essentially buying it at high. But if let's say you bought property before it, and then because you had money prior, you bought at a relatively discount, and then you could sell the house for a higher price. Fair. So, a national measure of prices in August rose 13% over the same month a year ago. This S&P index reported Tuesday that's down from July's 15 annual gain, marking a month-over-month decline. There's a lot of opportunity to buy, in my opinion, because again, it's a discount. So they're trying to correlate as far as housing and the S&P kind of works, but we'll see. So the 20-city composite, which measures the price growth in major metropolitan areas, posted a 30% annual growth, down from that prior month. The figures came in lower than the Bloomberg consensus estimate for that amount in realized growth price. The forcible deceleration in the U.S. housing prices that we noted in a month ago continued our report for August 2022. Mr. Larza said, managing director of S&P Dow, said a new statement. Further price gains decelerated in every one for our 20 cities. These data show clearly that the growth rate of housing prices peaked in the spring of 2020 and has been declining ever since. So this might be the top of the wave, they're saying. So I guess they're assuming that now that pricing is going down, people are not putting their money into buying houses and going to slowly shift back into the stock market. But who knows? So have to wait and see, right? So shouts to Rana Fat Bat. She titles it Economists Fed to hike by 75 basis points again should pause when inflation halves. So she writes, the Federal Reserve will go for its fourth consecutive 75 basis point interest rate hike on November 2nd, according to economists public records, who said the central banks should not pause until inflation falls to around half its current level. So we talked about this in various videos. If you haven't watched it, go ahead. They said it since February almost March, I might believe, or even the beginning of the year, that they're gonna attack at this inflation aggressively. So this is, kind of what to be expected. It's the most aggressive tightening cycle in decades, has brought with it even bigger recession risk. The only reason why it's a risk, because again, if things are getting to the point where it's too expensive, it's gonna crash and lose. I think it's gonna lose value. Hence the recession back in '08, right? The survey also showed a medium 65 probability of one within a year, up from 75. Still, still a strong majority. Economics, 85 out of 90 predict policymakers will hike the federal fund rate by 0.75% to 3.75 next, as inflation remains high. For interest rates, future pricing. Only 4 respondents predicted a 50-point basis move. Now it's gonna be more. I wouldn't be surprised if they did 100 or 125 basis points hike. I would not be surprised. I